It's interesting. We're in this nascent stage of a global capex cycle. I mean, industrial metals have been a China story for the past 20 years. And suddenly, the rest of the world is trying to catch up. And we're starting to see spending coming through. What we haven't had is the investment in the supply side of the equation. And that's what's starting to cause the pressure. So, yes, I do think there's a long-term positive story here. And I think the global manufacturing data has just attracted investment back into the asset class because that's been absent year to date.
How much is also hinging on China's industrial recovery? Because while, yes, there are parts of the economy that are still very much languishing in the dark, like the property, particularly the developer-led property sector, but there are other areas, particularly the high-tech sector, the green transition sector, other sectors which are really starting to show some green shoots.
Yeah, the old economy is struggling a bit, and the iron ore price will tell you that. The iron ore price has underperformed, but even in the past few days, we've seen a bit of a push there. You're seeing that fiscal impulse in China has been delayed. I don't think it's been cancelled. It's just been delayed by some of the problems at the local government level. But China's pushed so hard into manufacturing, and particularly in terms of clean technology. And we talk copper. Al Bailey mentioned how EVs are more copper intensive. So is renewable energy. And these are the areas that China's leading in. And that's actually exporting some of that metal intensive growth, particularly to other emerging markets.
Let's pull on the China thread a bit more. Both in Europe and in the U.S., we were actually talking about it off camera. Reshoring has become a bigger and bigger issue. I was looking at some of your note. You said that restocking is a bit muted, but won't it pick up more and more as companies and even governments, they go from just-in-time inventory when it comes to industrial metals and things like that to just-in-case? Won't there just be a greater need to stockpile those inventories? And also, won't that continue to be a big tailwind for these commodities?
I think so. At the moment, why I'm saying we're not restocking yet, because we're only getting to the peak of the rate cycle, and we haven't had that first cut
yet. But that's where the trend's going.
That's where we're going. We see it more into 2025, effectively, as a story. But typically, you need to see order books improving. Now, we hadn't really seen that, but I would say over the data points that was mentioned, we're starting to see it. One interesting point you noted there as well, what we've had absent in commodities for 20 years is developed world governments buying them.
Right.
And actually, in the global segmentation we're seeing, suddenly there is a need to rebuild those inventories.
But is it a double-edged sword? Air Bailey laid out the price targets brilliantly just a minute ago, but as these countries and companies, as they continue to have more just-in-case inventory, their supply chains are going to normalize. And aren't the supply chains part of the inflationary issue when it comes to commodities and everything else? So isn't there has to be a certain ceiling in your mind on just, because nothing goes to the sky anyway.
Absolutely. And the prime example is the copper market. That's the one we always talk about, where commodity markets always self-solve. They always find ways of sorting things out. If we can't solve it from the supply side, well, guess what? We'll hurt demand, and that's what inflation naturally does. That's why we had underperformance for much of the past year. So if copper gets to, let's say, 4 times the aluminium price, you would tend to see a bit of switching and substitution. And that's why, I see some very high copper price targets out there. We could reach them temporarily, but then you would see demand adjusting in key areas.